Welcome to the Luca Ledger.
Welcome to the Luca Ledger with Brett C. Arnold, CPA and president of Luca Financial. Brett works with entrepreneurs and small business owners to help them understand their numbers, reduce unnecessary tax burdens, improve cash flow, and build more profitable businesses through strategic financial planning and fractional CFO guidance. I'm Evan Mack, and today we're talking about cash flow problems in small businesses, why they happen so often, and what business owners can do to create more financial stability and visibility. Brett, welcome back, sir.
Thank you so much. I think we've got a really great topic today.
Good stuff. So let's kind of dive into it, Brett. A business can look successful on the outside and still constantly struggle with that cash flow. Why is that such a common problem for growing businesses?
It seems like when we take on new prospective clients or new clients once they engage with us and we start looking at books, I've got a really good understanding now of how cash flow works for business owners. And the biggest deal is they're so focused on that income statement. So of the financial statements, there's three main statements. The one that most business owners look at is their income statement. What was my revenue? What were my expenses? And what's my net income? That's an important number to track as a business owner. But as an accountant, I often think more important, we need to be looking at cash flow. And that's all sits on your balance sheet. The reason is I can see that I've got a really great top line revenue number or really great margins. But if I'm financing my business through debt or funding all the operations through debt, it will run out at some point. So cash is king. I know that saying is a buzzword, and it just you would think that maybe we moved beyond that, but that's not the case. You can only live on debt for so long, and that's especially true as a business owner. So when we're so focused on net income and margins, but not understanding the health of the company, that's where we start to see businesses or entrepreneurs run into real cash flow issues.
What are some of the first signs that cash flow is becoming unhealthy, even if the revenue still looks strong?
Yeah, that's a really good point. So I do always like to make there's a large distinguishing factor between revenue and cash flow. Revenue is all your money coming in. That's really important. But cash flow is what you're keeping at the end of the day. Like that's my working capital. That's what I can use to fund my business. Where we see business owners start to really see problems is whenever they've got vendor payments or payroll. Those are kind of the two biggest things when cash starts to feel tight. So let's say I've got a total payroll expense every month of about $100,000. I've got two payrolls of $50,000. And when you feel that squeeze, when it's time to go pay payroll and it's tight, so maybe I'm not planning for that expense, or that large deposit from that customer hasn't come in yet and I was counting on that to help cover payroll. That's when we start to recognize, hey, we could be running into some cash flow issues when you start to just feel that squeeze when I've got to go make those payments simply because it wasn't planned for.
How often do business owners mistake revenue growth for that actual financial stability?
Yeah, we see this happen a lot, and that's simply just because revenue owner or business owners are so focused on revenue and net income. And when they're not looking at that full picture, that's when we run into issues. A lot of times when we have clients join our firm or start engaging with us so we can help them with their books or CFO work, they're still okay. Mostly because maybe they're a newer business. They've only been around for 2 or 3 years and cash flow is still strong. They've not gotten into maybe some bad habits that long-term entrepreneurs can collect. So it's okay. But more seasoned entrepreneurs who haven't ever looked and they're just running their business based on their feelings, that's when we notice that clients really start to run into cash flow issues. It really is about just being aware of your situation. Revenue and net income is very different than your cash balance, the cash that's coming in and the cash that's going out.
So what are some of the biggest reasons money starts disappearing faster as the business starts to grow there, Brett?
Yeah, I always like to share this example. So whenever I'm talking with prospective clients, I had a client in Houston and she was running her business just based on her bank statement balance. So she knew that typically I had more in my account at the end of the month than I had at the beginning of the month, so I'm doing okay. And that's okay for a little while to run your business that way. But as your business grows, you can start to run into problems. So when we connected, she said, hey, I used to just look at my bank and I was fine. But now my revenue is growing every month. So I'm invoicing more and more clients. We're bringing on new clients every month. My top line revenue, if I had it tracked, is growing. but my ending bank balance at the end of every month is getting smaller and smaller. I've got a leak somewhere and I don't know where it is. And this is true for a lot of business owners. So for this client in particular, we just needed to get her set up in accounting. So we need to get her some data. So we got everything cleaned up and we gave her about a 18 months trending data. And I said, hey, you're absolutely right. Your top line income, your revenue is growing. You're billing out more and more every month. That's true. And you're right. Your bank statement balance is getting smaller. And the leak in this case came down to payroll. Her payroll costs were outpacing her revenue growth. We see that happen a lot of times with new business owners where they think the solution to feeling problems in their business is just hire more people. And so for her payroll costs were outpacing the growth of her revenue. What that did though is that one, she had the data. So the feelings that maybe she already had were being validated and substantiated by that data. And then it allowed her to make those hard decisions that us as business owners don't like making sometimes. And that came down to, I've got to cut people. She had a feeling that maybe she had some excess capacity in her and on her team. I don't think everybody's working full time. I don't know if these people are really even being efficient with the time that they are working. And that just gave her the data that she needed to go say, hey, I've got to cut these people. She reduced her payroll costs by 30% after we were able to get that data to her. That went straight to the bottom line and increased her margins. So that's a really big one that we see, especially new business owners spend excess cash on is just people. They think they need more people and that's going to fix my problems.
Wow.
Another one is commingling business expenses and personal expenses. Which is a huge no-no in our world, especially if you're set up as a corporation, a small business corporation, a C corporation, a partnership, an LLC doing business under an EIN. Do not commingle business and personal expenses because it's hard to track margins. I've got revenue and then I've got expenses. And when I've got personal expenses creeping their way in there, I'm just going to pay for this meal on my business card, or I'm just going to run my car payment through my businesses this month, or I'm going to have my business pay for my insurance, my cell phone, whatever it might be. While we might be able to find a case to say that is a true business expense, a lot of times they're not. And that's where we start to see clients run into cash flow issues. They're not really separating personal cash from business cash, and then they deplete both sources.
Wow. So how much of cash flow management really comes down to planning and forecasting as opposed to, just making more sales?
Yeah, everything. I don't want to overcomplicate it and make it sound like it's this huge beast and you've got to have this massive cash flow dashboard in place and you've got to be looking at everything all the time. But planning is huge. You're only going to keep cash if you plan. You can grow your revenue, but if your margins aren't good or you've got poor margins, you're just going to continue to have the same problems. They'll just be magnified. So you really need to hone in on the margin side, but planning for cash flow is really, really important. Businesses that do the same sort of income and expense every month, those are easier to track, to know that this is my cash balance. And maybe by the third week of the month, it might dip down to a level that I'm a little bit uncomfortable with, but I know that my billings start coming in at the last of the month, so I can manage that week or so. That's fine. But cyclical businesses who have really heavy cash receipts at the end of the year or at the beginning of the year, and that's their working capital for the rest of the year, planning is crucial to know that I feel really cash heavy in Q4 because that's when all my annual billings come in. Great. But you've got to be able to keep your business afloat until the next Q4. So just because you've got a lot of cash in your business doesn't mean you can use it. Planning is going to be really crucial in that moment. Again, because we don't want to see business owners or entrepreneurs get into a situation where they've got to rely on outside funding in order to fund their businesses. There's a time and place for that, right? We can leverage debt all day long, but it needs to be done as a part of the plan. I've seen too many clients get stuck with cash flow problems, and their only option is hard money. Like I have to make payroll in 3 days.
Right.
This hard money lender can get me cash tomorrow, but it's 40% interest or something absurd. And that goes straight to your margins. It's going to make them even worse. So we've got to be able to plan so we don't find ourselves in those situations.
So once a business owner realizes cash flow has become a problem, what usually needs to change, probably right for first.
Yeah, once you figure it out, it might be a little bit too late, but there are things that we can do to go fix it. First things first is we need to put a pause on spending. So we need to go focus on what does my cash flow look like right now. there are certain things that you can't put a pause on, like payroll or rent. But then we really want to focus on what cash do I have coming in and what cash do I have coming out. Ignoring my bank balance. I don't care about the bank balance right now. I really need to focus on inflows and outflows and making sure that I've got more inflows than I do have outflows. So once you kind of put that plan in place, we've built a proprietary tool in our firm. We call it a cash flow dashboard. We're able to connect to the back-end data of QuickBooks, and we can build out this really great 13-week cash flow dashboard for our clients to see. So they'll know at any point in the next 13 weeks, am I going to find a dip in my cash reserves somewhere? But when we do find ourselves in that spot, we need to pause and we need to go look at inflows and outflows to see, can I manage this storm? If I can't not manage this storm with the cash that I have, what outlets do I have? Are there credit cards that I can use to delay cash outflows for 30 days? Or are there lines of credit that I have access to? We want to find some smart ways that we can leverage financing if we need to. But pausing and taking a look at it is the most important thing. Turning a blind eye to it, just like turning a blind eye to taxes, is not going to be a good move when you find yourself in a cash flow crunch.
Good stuff. And before we kind of wrap things up, my best friend's a CPA, and if I asked him what his favorite thing about being a CPA is, he'd be like making money because that's my best friend. But what about you?
Absolutely.
What's your favorite thing about what you do there, Brett?
Really and truly, I think it's being able to empower business owners to understand their financials. We service so many different types of business owners within our firm. We've got doctors, nurses, lawyers. I've got electricians. We've got a commercial construction, residential construction, all sorts of different business owners. And being able to empower them is what we enjoy most. Those business owners can go kill it in the courtroom, or they can build a really incredible house or a commercial office. I can't do that. Don't give me a hammer. I don't know what to do with it. They can do that all day long, but I want them to understand the financial situation as well. Because if you can build a really great business, you can keep it going and build a legacy that you can pass down to your family. If that's your long game, is like, I want to be able to set up this legacy for my family, or I want to build this business and grow it to $50 million and exit and have a fat stack of cash to live on. Awesome. That's only going to work if you plan. And we want our business owners to really and truly understand both their financial situation and their tax situation. I love it when I get on a call with a client and I can tell that things have clicked. They understand the numbers that we're telling them. They understand what they need to do in order to achieve their goals. And then they also understand how taxes work. It can be a really complicated system that the IRS has built. I think all of us have seen those memes that the IRS knows how much we owe them, but they make us kind of figure it out. And I really want for my business owners to understand what their tax return says and what we're reporting to the IRS. So it's that idea of education and empowerment that I really like as a CPA. And when I see that click with my clients, it's like perfect. And making money, we'll say that too.
Good stuff. Thank you so much, Brett.
Absolutely.
All right, that's it for today's episode of the Luca Ledger with Brett Arnold. If you'd like to learn more about strategic tax planning, fractional CFO services, or building a stronger financial foundation for your business, visit luca-fs.com. Thanks for listening, and don't forget to like, subscribe to the show, and leave a review if you found this episode helpful, and we'll see you all next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.